Good morning. Welcome to Forex In Four. Today is Wednesday, October 26th, 2011. All right, we're starting out with the euro again. Let me start off by saying I've been having some issues here with my charts, so if it takes a little while to load, I'm going to apologize in advance. But we're starting here with the euro, and you can see that we've gone into the sideways range just above this 139 area, so we're sitting up there. And today is the final countdown, if you will. All right, we're expecting to hear the details of the plans that are supposedly going to solve the euro debt crisis. And we've talked about all the issues that are out there, the problems with Greece specifically, getting the bailouts, and then how to, stem the contagion from going to other countries. I mean, you don't even hear about Portugal and Ireland any longer. It's now the focus is on Spain and Italy, primarily, and more so Italy, which is the third largest economy. Now they're talking about France as well. So they need to come up with a big plan. All right, so what are the rumors? What are they coming up with? Well, first of all, they're voting on the plan in Germany right now as we speak. So that's going to give us an idea of what it is. But they're talking about, first is going to be the haircut private investors have to voluntarily agree to, which right now it was being floated as high as 60%, but like the most recent thing I've heard is that it's actually at 50%, meaning people have to accept 50% losses on Greek bonds. And I don't know how they're going to go ahead and do this without this constituting a default technically. But if you're a private investor who owns CDS in this, it's why would you take a 50% loss when you should be pushing for default so that you can get paid out 100% through the credit default swap insurance? So that's going to be interesting how that plays out. Let's see some other things. Size of the EFSF, how big is that going to be? All right, number I'm hearing and being floated is about $1 trillion. Well, how's that going to happen? Is it going to be a combination of the current funds that they have in the EFSF plus the ESM? All right, are they going to leverage that up through the ECB? Not exactly sure how that's going to happen. All right, there's also talk that perhaps they're going to come up with a special purpose vehicle, all right, where they can get money from private outside investors to come in, and then they can use that money as a backstop for the bonds. They can insure them, say the first, whatever percentage of losses they agree to, which hopefully will encourage outside investors to pick up some more of the sovereign debt that's out there. So, a lot of things that we're waiting for. But you can see here, we've just gone sideways on the chart, and one of the things that I'm looking for, and I showed you on the chart yesterday, and I'm just going to try and pull this up on longer term. If I can't, because of the delay that I've got here with the charts, then we'll come back to it. But essentially, markets have been moved higher off of the October lows. All right, we were looking at a little bit of a V bottom there. So when you get those moves, we've been moving a lot higher. And one of the things that we have to consider is that the market's known about this problem for some time now. Okay, and yeah, you can see here it's taking long for this thing to load. So unfortunately, but the market's known about this for a while, and yet markets are still going up. All right, S&P's been moving up, Euro's been moving up. All right, there's a pretty high correlation between Euro and S&P. It's not the highest. That's actually Australian dollar, as someone pointed out to me yesterday, the other day actually, I should say. But that Euro's been moving higher. So what's going to happen when this announcement comes out? Okay, here we are in the daily chart. Wow, that took forever. I think essentially what we're going to see is, you can see here that we've got the pivots up, and they've started to pull back a little bit. I think we're going to see a spike up above this R2 area of resistance, hopefully in the 140 levels. All right, and then I think we're going to hold this R3, which is up here at about 140, 130. So I'm probably going to be looking to get short this if we get this move higher. All right, and it push up to above 140. So if I can hit this thing in the high 140s, I think that's going to be a pretty good entry price. And you can see here on the stochastic that it's just coming up and just starting to hit the overbought. All right, and then it looks like it's getting a little bit toppy. So perhaps one big spike up like that, and then a pullback is going to complete this stochastic pattern. As you can see, it's just starting to form. So I'm thinking that if that occurs, then we get a pullback, say, to this S2 area, 138. I'm thinking 137.50 on a spike down. All right, and then I think it's going to be game on again, and the thing moves higher. All right, because the initial announcement, it's going to be good for the market because it's going to remove some of the uncertainty. We're going to know exactly that there is a plan. I mean, part of the problem is that we're on our 14th summit now, from these Euro leaders, and nothing concrete's come out of it. So the market's going to be happy that there's actually a plan. Now, when the details start leaking out, they may not be happy with it. So I think that's where we're going to see that volatility occur. But at the end of the day, if you think about, what the markets are doing, the stock market wants to go higher. I mean, just looking at it, it wants to go higher. It's moving, up despite all of this risk that we've seen. And if you think about it, all right, it's been pretty flat for the year. And you have all these big fund managers who haven't made any money. So these guys are really looking to push stocks into the end of the year so they can show some return for their investors, so they still have their jobs and things like that. So I think the stock market really wants to rally, and then we're going to get the risk trades moving along with it. That means more dollar weakness, and that also means euro strength and Aussie strength. So I just want to show you Aussie here, just taking a quick peek. You can see here Aussie's been actually selling off a little bit. All right, we came down we were just above the 105 area, and I've got it on the 5-minute chart. I don't want to shift back to other charts because it's taken so long for the system today. But essentially, Aussie's sold off on their CPI data that came out. The headline figure came in as expected, 3.5%, but the trimmed mean number was at 2.3% versus an expectation of 2.7. All right, and then the weighted median index was at 2.6 versus an expectation of 2.7. So consumer prices were lower in Australia. All right, those were the year-over-year numbers. Quarterlies were 0.3 versus an expectation of 0.6. So what that means is that market's not expecting a rate hike out of Australia, and in fact, the next move may be to lower rates. All right, if that happens, that obviously decreases the interest rate differential, which makes Aussie less attractive. However, we may see a bounce happen. All right, on the longer term when this euro debt deal gets itself figured out. I'm not going to go over to the Kiwi right now because it's not going to show up, but they've got their interest rate policy meeting coming out later tonight, and they're not expected to change. They're at 2.5%. All right, they had lower than expected CPI data the other day, and that pushed the Kiwi a little bit lower. Just want to show you dollar yen as well. All right, boom, making new all-time lows here down at 75.75. I was at an interesting presentation the other day where strategists were saying that look, Japan doesn't have the arsenal to try and do a Swiss National Bank style intervention. All right, and these analysts think that perhaps this could strengthen further. I think the call was at 72 versus USD. So dollar weakness has been the theme that everyone's sort of waiting on. And right now there's some news out today that we're going to get U.S. home sales and some news out of Canada, but by and large, all right, everyone's waiting to hear what's going to happen with the Eurozone. And I'm not exactly sure what time this official announcement's coming out. I'm guessing it's going to be by about 4 or 5 p.m. Eastern time, as that's going to be very late in Europe. All right, this is going to be a historic event. I mean, there's going to be some volatility here coming into it, and these, there could be more volatility as news starts trickling out. I mean, Merkel had to present a plan to German Parliament to get a vote on it so that they can agree to it. So there's going to be some details of the plan at that vote. So it may start leaking out early. All right, and then all of a sudden, boom, we're in Brussels. Okay, and now they're talking about, all right, well, let's unveil the plan. Let's see how it goes. So I don't have a good time on when this thing's going to come out, but you just want to keep an eye on it to see. And that's really going to be the big story today. I mean, we can talk about some of these other periphery things, but it's really going to be euro, what happens to the euro, and then the dollar by proxy. We know that euro is the anti-dollar. So if euro up, dollar down, and we'll figure out what happens with all of the other currencies in there. But my feeling is that the initial response is going to be positive. All right, we're going to see a big market push up, but then once the details start trickling out, people are going to say, oh, wait a second, I don't like this as much, and we could see some selling. But does that mean euro's done? No. I mean, we know about the volatility in this market, and is this all going to happen in one day? Maybe, maybe not. But I think we were due for a little bit of a pullback here. We've had a pretty nice run up, and that could set the stage for the next bounce higher. So just be on your toes today, because who knows when this stuff's going to start trickling out in today's world of Twitter and Facebook and all these places. Who knows when this stuff's going to be posted. Also, be wary of the false rumors. Don't chase volatility. I'm telling you this stuff because there's a lot of there could be volatility. I'm not saying that there will be, but a lot of times people like to get in and just try and bang these things, and if you don't have a full understanding of what the situation is, then you could be in trouble, especially if rumors prove to be false, or if market reaction is there's a head fake or any of that kind of stuff that you see with trading. So today's just a day where it's usually best to err on the side of caution. Don't try and be a hero. Don't get out in front of these things, and just let the markets come to you. So, by tomorrow, hopefully we'll know what's going on with euro, and hopefully we can go from there. So that's what I've got for today, gang. Good trading to all.